The fourth quarter starts with jitters and a flight to safety. Greece unable to meet its 2011 deficit target, causing a sell-off in Asian and European markets. The negativity is threatening to spread to the U.S., with futures pointing lower and gold popping more than $30. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you the morning call. Happy Monday, everybody. Happy first day of the fourth quarter. Scott, I have some really interesting historical stats for you from Sam Stovall, Chief Equity Strategist at Standard & Poor's, who says the S&P rises an average of 3.7% in the fourth quarter, and in the third year of a presidential cycle, which we're in, it's up 2.4%. Not to mention that after the S&P has dropped more than 10% in the third quarter, it can rise on average of over 7% in the fourth quarter. What does that mean? I'm seeing historical data point to a really positive quarter. Technically, are you seeing the same kind of thing?
So historically, every investor should just take all their money and just buy the stock market.
Apparently.
According to the statistics, get in there, go all in, everyone, close your eyes. It's that easy to make money in the market. Well, I'll tell you right now, it's not. You know, all those stats are good, and I do think that the fourth quarter could be good as far as performance, but the question is where from? Where's that bottom going to be? And we've been talking about this lower range and this lower, just say, wedge type for the last 8 weeks, and it does seem like it's going to be resolved to the downside. So if it is resolved to the downside, you're going to see a decent fourth quarter, but it could come from a lot lower prices. And the question is, if you're long, can you hold on? And if you're looking to get in, what are the levels to buy? So if you take a quick look at the S&P, you'll see what I'm talking about. You know, we've been trying to get everyone to actively invest. You know, this was the first macro pattern. This was the head and shoulders top pattern that was very bearish. Here is where IBD said get the cash at 1,300. Here is your last line of defense to get out of 1,250. Fast forward, we're in this lower range. We're in this flag type pattern. Okay, what this is a bear flag, meaning you had a pull to the negative side down, you go to the right, consolidation. People are trying to figure out is this decline enough? And now we're approaching very important support. Support that if you bought in this area and you start to break, you're not going to feel comfortable. So if we start to get below 1120 and get a 60-minute close below, and then if we get a daily close below 1101, if you look at this weekly chart, you'll see that the next major support is around 1020 to 1050, and we can get there, you know, pretty quick.
So basically you think we could see more downside before a big rally, which is interesting because the headed tape article in the Journal today said the opposite, that we could see a really big rally right off of the bat in the fourth quarter and not to trust it. What's the probability that we might see that kind of action?
Well, there are two sides of the tape, and that's why we talk about being tier one macro long. If you are in the camp that we don't break the lows, you know, you want to be involved in something. You want to be involved at these levels because you sold 1250 or 1300, so to buy back around 1120 to 1140, you got things on sale, but you should be only in a tier one because if we break those levels, you can get them cheaper to tier two, but if we don't break those levels, there are going to be a lot of shorts trapped. There are going to be people who thought they can get it cheaper having to pay up, and then you get to tier two when the market shows you commitment where you add to things that are working on strength. Right now, you have not been able to add on strength. You're not able to chase anything. Every time we've had 3 up days in a row, it's been a much better sell than buy. And until that changes, I'm going to watch the stock market action. And right now, we're still seeing pressure. We still see things very heavy. High beta tech, you're talking the strongest stocks out there are breaking important moving averages. The weaker groups are only giving you like a day and a half bounce before heading lower. So there's still it's a very negative environment, and we still have a lot of headwinds in front of us. The jobs number,
right.
you
so
name it.
I'm going to go out on a limb here and say that perhaps you're shorting.
Well, I've been short since Wednesday. Okay. You know, the day when the Dow was up 250 points and you saw Amazon down, Netflix down, Apple down, Baidu, Sino, WYNN, LVS, GMCR. I feel like I could dance on all of these things. They were all down. I'm like, why is the Dow up 200 points? And then the S&P and the Dow followed suit that Wednesday, Thursday, Friday, and now we're down a little bit. So, you know, obviously I'm not as short as I was, but I'm going to see if I could get a nice pressured short if we break that area, because if we break that area, you're going to see 1070, 1080 quick, and then ultimately we could see that 1050. So it's going to be very tricky because we are oversold. So you have to just know what you can handle.
All right, let's go to some individual sectors because in terms of earnings, that could be a potential catalyst in a positive way. And I say that for 2 reasons. One, Capital IQ is expecting a solid earnings season with gains coming from energy and materials, which is very surprising. I also spoke to a portfolio manager last week who says that he expects 68% of companies to beat on profits and 64% to beat on the revenue side compared to estimates, which is pretty solid compared to all the negative data that we've seen. So I want to start with energy. Want to look at the OIHs because I don't really feel like the charts are showing that kind of strength headed into earnings season.
Which is good. So if we have that kind of strength, these things are going to rally hard. The question is also, what are they going to say about 2012?
Right.
That's what a lot of people are scared of. But if you look at the OIHs, it's been a troubled group. We caught a cute little short last week, but it was sold. Take a quick look. It's at new lows. Technical damage across the board. This is actually the weekly chart that tells you the story that we're coming into some bigger support. This is like 100. This goes down to about 90. But if you look at the daily, this has already broken the lows of the year. This was your last wedge where it started to resolve to the downside, being a leading indicator to the downside. I see no strength here. I see no reason to get into this group first.
Now, and then a lot of that also comes from worries about a China slowdown, but I was reading a report from Barclays over the weekend that said that underlying demand trends for industrial metals is remaining really strong, that they're going through their stockpiles, so they're going to have to import more metal. So I have to ask you to take a look at the industrials, the XLI, to see if that's showing any strength or where it might be able to bounce off of.
Well, the industrials during the head and shoulders pattern type, that showed extreme relative weakness. At this level of the market, it's not showing a relative weakness, but it's also not showing strength. If you look here at the chart, you'll see this group has not broken the lows, so it's showing a little relative strength, better than the OAHs. It's basically where the spiders are. So this group is in line. So the correlation is in line versus relative weakness or strength. I think if you want to be in this group and you believe that story, you could look here first or look to this. But you could also look at the spiders or the S&P and probably get the same bang for the buck.
Has more to prove then. Then let's go to tech. Go to the Qs in particular because you're mentioning them before. As you know, they're usually the leaders. So what are they telling us?
Well, the Qs have been the place to be. It's been where the relative strength, the high beta stocks have been doing awesome. But lately, they're playing catch up to the downside. I tried to show you that rising wedge or the ascending channel. It broke last week to the downside. So that was your stop. That was your area to get out and say, you know what, let me figure it out. If you look at the Qs here, you will see this area for the first level was right here when it broke below this 55.50. And then you could have gotten out when it broke 55. It broke this accelerated uptrend. And then this uptrend that was from the lows, and now it's kind of in no man's land. You want to see this get over 53 and hold it quickly. Otherwise, if it starts trading through Friday's low, it could play catch up to the downside, and then this is a trouble spot as well. But I do think that when the market does want to get into bounce mode, the Qs will be an area to buy. Maybe this 52 holds if the market makes new lows. And
then talking about the leaders, we have to go to the financials because the markets can't have a sustained rally without strong financials. But they just got really hammered, especially Morgan Stanley. Now they're the cost of insuring Morgan Stanley is now higher than some French banks. I mean that really hurt that stock on Friday. So what kind of weakness are you seeing there?
The XLF, we had a bit of a bounce back up to 1250 last week. We talked a few times how to sell into 1250. Morgan's been a problem ever since it broke 20. The financials have never been able to sustain more than a 1 to 3 day bounce. So until that changes, they're going to be a headwind. And usually you don't know there's a problem, but people know well before. And the guys that buy these swaps, they for some reason know what's going on behind the scenes, or they create what's going on. XLF,
so they want to try to bet like they do.
XLF right now it's hanging on by a thread. It's still above the low of that 1150. Until this starts to break this downtrend here. If you have to be in some, I would say you probably shouldn't be. It's an avoid. I think above 1250 and a hold, these financials change, but right now it looks like it's heading more towards the lows than to break that.
And talk about revised earning estimates for this group. Okay, finally, really quick, we want to wrap up with retail here. Had been holding up, but we've seen a lot of worries now about high-end markets like a Tiffany's with its exposure to China and perhaps some sort of consumer spending slowing there. What does the chart say?
Well, the RTH has tried to hold up like the Qs, but it also broke its accelerated uptrend. And a lot of stocks in this group, like Lulu, Deck, Under Armour, Tiffany, you name it, they broke those high-level consolidations so that you had to get stopped out. Relative strength is great until it's not. And right now, actually, if you look at this, I'll go to the daily chart, you will see that it really is holding up better than all these other groups. From the low, it's still above this 102. I would say if it starts breaking below this 102, you could head for the exits. You already missed you have a high, a lower high. If it breaks this, it could be in trouble. I just want to show you Lulu real quick because we drew this as far as the accelerated uptrend. That could stay intact until it doesn't, and it broke this 56 after having that outside reversal day to take notice. Came below, retested, and now look at it. That's what happens when the trend changes. So just make sure when the trend changes, you're not falling asleep behind the wheel.
All right, and we'll be right back with how to trade earnings season and some quick ways to make some cash today right after this.
When the closing bell rings, it's not quite time to run off to happy hour.
Good afternoon, Scott Redler, T3 Live. Welcome to today's recap.
Before unwinding, take stock of the trading day. What's the complexion of the market? Which trade from the morning call triggered? What sectors are in play? And where will the opportunities be tomorrow? Scott Redler covers it all in the T3 Live Daily Recap video. The T3 Live Daily Recap airs every day after the close.
As far as these markets are concerned, we got to take off those glasses.
All right, let's get in the trenches with earnings season. Some companies have pre-announced, some companies have reported, and the outlook's not so great. Scott, want to go with Tidewater first. Now, this company transports vessels for offshore driller, but doesn't provide an earnings outlook. But we did hear last week that its revenue will be less in the past quarter because of delays getting ships that were committed for some charters to Saudi Aramco. Now, basically, these vessels haven't met certain standard. It seems like this is company specific, but that revenue guidance is going to be below that $255 million, $260 million that we were expecting. Did the chart just get totally killed? Like, was it just brutal out there?
I think you give us a lot of specifics that, during earnings season, people aren't going to even really look into. The question is, do they lower revenue? Do they lower guidance? Do they lower next year? And is it priced in? So far, we've seen a lot of pre-announcements and some come out, and they haven't been priced in. If you look real quickly at Tidewater, just to show you the chart, this stock has come all the way in from back in February, March, from 62 to 54, came all the way down. I'm not sure if this was earnings day or this was.
They haven't reported earnings yet. This was just an outlook.
Okay, so then they pre-announced and it wasn't priced in, and look at it at new lows. So the question is, can they pre-announce or can they come out with earnings and can it be priced in? So far, not yet for this stock and maybe not this group.
Right, but I do want to point out that company specific is important because if you look at Mosaic, for example, that necessarily wasn't company specific. Reported, they missed, the margins are slowing, and that's going to be a group effort. We also saw a really bearish crop report on Friday that really hurt the corn price. That's going to be a big headwind for all the ags.
And all these ags were crushed, so they were like, okay, is Mosaic's news going to be priced in? I want to show you a group that's not priced in. Mosaic, like you said, not priced in for the group in this sector. Look at this. They could have tried. It was as high as 85. Here was your last little wedge that even broke to the downside well before the numbers. This showed you right now, here's where you get out of your stock. You don't sit around. That's why you have, stops in. Came back down towards the lows. And we tried to play this for a Q play into earnings. That's why you did options with options profits. But look at it. On the dead lows, didn't price it in. If you look at the MOO, which is the ETF for this group, it's at the lows. So it's showing you that nothing is priced in yet on these pre-announcements or on results that aren't meeting the standards.
But then you have to wonder if, say, CF reports an inline report and their margins are okay, it's so much bad news will be baked into the group that it could rally. So could that be an option too?
Definitely. And that's why in a week or 2 weeks from now, we'll see where the market is, where these groups are. And if all of a sudden they're lower and then they come out in line, then you get the relief bounce. But from these levels, we're not seeing that relief bounce. So don't just think you could buy bad news yet, because bad news is still being treated as bad news.
Totally fair. All right, let's go to the chip sector here. Micron missed on weak memory chip demand for PCs, lost like 14 cents a share. Advanced Micro Devices also cut its revenue forecast from 10% growth to 4 to 6.5% growth, looking at 0.5%. I can't talk this morning. It cut its revenue growth outlook in half. That's what I really wanted to say, and the whole group got hammered.
Half. That is a lot.
That's
not
a lot.
10, 20. They're saying it went down by half, and you would think in an environment like this, they would go to some of the low-tier chips to save some money for the company. So they didn't even go into AMD. They're still going with Intel, but who cares? At this point, AMD was not priced in. You look at the chart here. Gross. I don't think I know anyone who owns this stock still. Anyway, from 9. They could have tried to price in it at 6. The bad news wasn't. It's at yearly lows. It could be lows of the last 3 years, who knows, but they didn't price it in. And it also hit Intel. So Intel will be interesting when you come in. This just broke this upper range. You had a high, lower high, broke this 22. Let's see if Intel could hold like 21. That would be interesting or constructive.
Gross. I think that sums it up for this section. All right, let's go to some quick ways to make some cash. We want to go to Apple. The iPhone conference announcement is going to be on Tuesday. It hasn't been the typical buy the rumor, sell the news kind of thing because the stock is sold off. So how would you be playing it?
Well, that makes it a little bit easier. Usually they run it into an event like this and then they sell it off. Right now, they've been beating it up into some key moving averages. So I'm going to try and look at it long. Apple showed some relative weakness last week. We made actually more money shorting Apple than long. Here is your sell. We just broke a trend line. So this is pretty key. I want you to watch this because if we don't get back above this 390 pretty quick, this could easily see a move down to the 350 area if the market breaks the lows. So right now, I'd like to see Apple get above 390 and hold to limit some of this damage.
All right, let's go to Amazon. Kind of got hammered on Friday, but I wonder if it's going to be like a favorite buying back stock of the fourth quarter.
Well, Amazon, you were able to sell the news of the introduction of the tablets, which a lot of people on my floor did. It broke its 21-day, not yet the 50-day. I think you got to watch 211, that'll be a spot to perhaps buy some Amazon back.
And then Netflix is now the stock that everyone kind of loves to hate. It seems like a lot of portfolio managers were just dumping it, like did not want to be caught dead owning this long at the end of the quarter. Do you think we'll see any kind of bounce?
Well, it started a little bit on Friday. It was a great trade last week. Netflix got crushed, broke all the uptrends, and then tried to consolidate around 125. Wednesday was probably my best trade of the day when it broke this area, just to show you how a bear flag works. Big move lower, tries to consolidate, some bottom feeders come in. If it doesn't hold, it breaks lower. This 125 was your area to get short, and now I think you could trade versus the low here of about 108, and it could bounce back to retest this, so this is your area to watch, but Netflix is very dangerous still.
All right, let's go to WYNN in Las Vegas. Sands, I heard some chatter on Bloomberg TV today about possible slowdown in Macau, which is interesting because we were just talking before we got on camera that, you know, the really rich guys going to Macau aren't going to worry about if they can't get a loan for a small business in a bank, so maybe that was overdone.
It could be a little overdone, but what's important here is that this used to be a strong sector. You know, for the past few months, we've been playing WYNN, LVS, and recently we've been saying how it's showing relative weakness. Be careful. We saw that push-through failure on both of them, and then we gave you lines in the sand to stop yourself out. You always have to look at the action before asking why. And if you look here at the chart, you will see on WYNN, here was your outside day. This was the day that it broke above this, just say 158, and came right back in. That's a sell signal. Then you had this 150 area to get out, and if you didn't, you had one area right around this bear flag, around 130, I would say 135-ish, and now look at this. So if you're still trapped long, I think you have to hold it. If you're looking to buy back, maybe you buy back versus a low here of 112, and you get a push back to 132. Same thing for LVS. I'm not going to get into it. Push through failure at 50. I think you could buy it versus 36 to 38 the first time. But this stock also showing relative weakness.
Two quick things, and then we're going to wrap up. We got to go to Freeport. I read over the weekend from Barclays that it's not the time to go long in copper, but it's not the time to short either. What would be the strategy for Freeport?
I agree. We tried playing it for a bounce. We caught that last week, but it was a day-and-a-half move, went to lows. Not a time. If you're caught in it long, I think you just got to sit. You broke all your rules. You know, you're in the penalty box. But if you're trying to short it, it's come down so much, you can get squeezed at any time. Just stay away for now.
All right, fair enough. Wrapping it up with gold, finally seeing a solid bounce between 30, 40 bucks. The stock market's down, makes sense, inverse correlation here, but a stronger dollar could be a headwind. Would you be adding to any kind of tier 1 position here?
I'm going to look to gold this morning. I played it last week for some quick trades. It was a nice reversal long into an up open, and now it's trying to pivot. It's up versus the futures, and look at this little pivot here on the chart. If it starts to get and stay above this 162, you can see it move back to at least 165 to fill this gap to 167. So after a big correction from 185 down to this area, you know, if you sold correctly into this noise, you know, perhaps you could get a cute bounce back to 165, 167. I did see JP Morgan stood by there, 2100, you know, forecast for the fourth quarter. I think that's a little aggressive, but we'll see.
Barclays has an 1875. I've been talking to a lot of people who also have 2,000, 2,300. So there you go. All right, that's it for us for today. Happy trading, everybody. Happy first day of the fourth quarter. I'm Alex Steele from The Street.
And I'm Scott Redler. Make sure to watch those levels, watch the action. A lot of events out there. See how the market handles it. Follow us on the virtual trade floor, and I'll see you at the recap. Have a great day trading.